Good afternoon, everyone. Gabe Velazquez here with you, transparenttradesolutions.com on a Friday. This is 6th day of March. Uh, as we've been, obviously, everybody knows oil hitting 91. It's sitting at 91. Next projection, obviously, for 100. Whether we get there or not, obviously, remains to be seen, all predicated on what happens with the war. Let's get right in the charts. We have a class coming up next Wednesday. Make sure you sign up for that with implied volatility. We'll talk about with the VIX at 28. Looks like it may be headed higher. So uh, you know, clearly all the focus is on oil and um, looking at a long-term chart of oil where you could project and possibly anticipate where it could turn if and obviously nobody knows until after the fact. You've got the next resistance level sitting at 94 based on this chart. Um, the obvious level everybody talks about is 100, but on the charts, you've got some pivots around, you got this pivot, which actually took it to 95. So actually more like 95 on a chart looks to be, you can see some levels here of prior peaks. Again, no supply really, and you can go back historically and take this chart across. We've peaked at 112 back in 2010 and so on and so forth. So, bottom line is you're probably going to need to see some reversal. Um, you know, uh, Bottom line is, oil is getting somewhat extended, but when you get these type of situations like we did with Russia, Ukraine, and so on, you just never know how high it's going to go. I think ultimately you're going to have to see a reversal in order for it to make the case for maybe a topping pattern or whatever. So it's situations very headline driven, as is usually the case with oil. So that's really bottom line. That's really where everybody's focused on. Now, what's interesting is the S&P on a relative basis. You would think that the S&P would be tanking, right? And it is to some extent. It's down 73. But again, pulling back the lens here, zooming out, we basically are right at demand and not that far away from all-time highs, believe it or not. So looks like there's still some complacency in the market. Maybe market thinks that we're going to resolve this issue with the Strait of Hormuz sooner rather than later. I think we need to break 6,700 in order for us to really fall back down again. And it's interesting also the fact that you would think that maybe a lot of uh, it's still early. I'm doing this at around 15 minutes before the close, so I think there may be some risk off coming into the end of the day and Friday and all that. But so far, it's very interesting how things are just kind of stalling out here on the S&P and the Nasdaq. Not really seeing a heck of a lot of selling as of right now. Obviously, if oil spikes to 100 over the weekend, you probably get a gap lower in the S&P. So situation is very fluid now. The VIX is also not really spiking. It's at 28 where it was these prior to, I wrote about it over the weekend, whatever. You can see these two prior spikes, but um, do we need to get up into the mid 30s? We'll have to see. We've had two episodes here, the Liberation Day and then the carry trade a year earlier. And then prior to that, some other major disruptions. But uh, also, by the way, the Ukraine war and all that. So we'll see if we need to get up into the 30s or maybe even back into the 50s if we have major disruptions again and crude oil spikes to 100. Still remains to be seen. So those are really the key factors right now. Rates we had are also looks like they're headed higher based on inflationary pressures of oil. Dollar not doing much today, which is somewhat surprising. Probably dollar rallies in that event as well. So, and then I find it also interesting that gold, generally a safe haven type of mover here, is not moving at all. It's just basically, I mean, it's up on the day, but again, looking at the longer term charts, it's basically sideways between 5K basically and about 5,200. So it's in about a $200 range. Similar with all the metals here, also with crude oil, I'm sorry, silver and platinum not moving much. Nat gas also not moving a heck of a lot either. It's starting to move a little bit, hasn't broken out yet. I think nat gas, if it breaks above 330, then you'll probably get a shot up to four. So it's starting to, but it's real volatile, really just kind of just sideways for the moment. So going to be an interesting close here. And clearly an interesting weekend to see if oil may be peaking too. I mean, if you're just in a vacuum and you saw the price of oil, it is getting a little extended. So any kind of good news coming out of that situation will probably drop 5 points, $5 in a heartbeat. But as we know with oil, it is very, very news driven. So that really sums it up. Clearly, this weekend going into next week, the longer this thing lasts, I think at some point something's going to break. Something's got to give. You are seeing some, under the surface, you're seeing some movement in software stocks. Palantir's up. Some of these software names. So there is some rotation, but overall, there's a lot of selling, which again could point to some capitulatory type of bottom here, but still remains to be seen. I would say if you're out of the market, you're going to have some great opportunities coming up probably next week. If there's big spikes and we get a big sell-off, at some point, I think the administration, which is very market sensitive, will maybe declare victory and maybe pull back on the Iran situation, and that'll obviously have a positive effect on markets. Other than that, it's still going to be probably more of the same rotation and lots of churn and lots of range trading for the foreseeable future. So I would keep a lot of powder dry and pick your opportunities at extremes, and that's really the way that I would see it. Now on the options front, again, except for the class, I'm going to go through some situations there with the class. So have a great weekend. Again, stay calm. Don't react to any major news at this point and just follow your strategy. Have a great weekend.